Robinhood shares are under pressure. A key earnings metric, adjusted EBITDA, missed analyst expectations. Joining us now, Devin Ryan, Citizens Director of Financial Technology Research. Devin, thanks for being here. I want to zero in on that EBITDA number and what looks like a miss here. What do you make of it? Because the other numbers look relatively strong.
Hey, Julie. I wouldn't really call this a miss. I mean, this was an inline quarter, but the thing is we get monthly metrics from Robinhood, so it's hard for there to be too much of a surprise in either direction. So results are effectively in line, but the reality is there's so much good here, I think, beneath the surface. So they grew revenues by 50%. They grew net income by 100% year over year. The EBITDA margins were over 50%. So they're incredibly profitable even as they're growing here. And then, one of the key metrics I look at is the net deposits. That's essentially their net new assets. And they had $18 billion in the quarter, which is up 60% over last year. So, I can go on, but just a lot of really kind of powerful growth metrics. And what's exciting is, a lot of the opportunity, I think, is still on the come here in terms of where growth is going. So they're executing right now. They closed an acquisition, trade PMR in the quarter, and they also bought back a lot of stock and they increased their authorization. So I think a little bit of noise here after the close, but I think people should be pretty happy with what the company just delivered.
Devin, I'm curious, we may be dipping a bit here in the after hours, but this stock has had just a tremendous run, Devin. I'm curious how you think about valuation for this name.
Yeah, so Josh, I remember coming on and you're talking about, can Robinhood be profitable? And I think that was a question. And then they got to profitability and how profitable can they be? The company's operating at 50% EBITDA margins right now. It's trading at north of 10 times our 2026 EBITDA estimate. So for a business growing 50% year over year in revenues, this shouldn't be trading at south of 10 times in our estimate. So the way I look at it, Robinhood's talking about 10xing the company over the next 10 years. And that sounds like a bold ambition, but if they can do that, we think the stock could be up, in the ballpark of that much. So you think about how well it's already done. We still think the best is yet to come, and they're just getting into these areas like credit cards, digital banking. They just again closed a deal, trade PMR, which is a full service advice offering, custody offering, and they're getting into digital advice as well. So they're kind of checking all those boxes, and a lot of these are still very early days.
Devin, I'm curious about all these efforts, right? Robinhood, sort of reputationally, a platform that is beloved by retail traders. It has this sort of, I don't know, a little bit of a rebel kind of vibe to it, right? That I think kind of as it came up during the pandemic era. As it expands out its offerings and starts to look more and more like a traditional brokerage or even a traditional bank, do you think it can retain that sort of vibe or brand identity that keeps its customers around?
Yeah, Julie, it's a great question. And I think the key point here is they're not going to look like the incumbents. They're doing things very differently, even as they're going into some of these quote unquote more mature industries that have massive addressable markets. And that's kind of the point. Credit cards, they're giving a 3% rate with a number of features that are really differentiated, and just the user experience is very similar to what people are used to on the trading side. And they're doing that in all the other capabilities. They're increasingly leveraging artificial intelligence. They're going to be one of the leaders there. They're having an event in June around crypto, which is, in my opinion, they're going to launch a lot of new products at that event, and they're going to get into stable coins in a bigger way, and probably another number of tokenization of real world assets. Robinhood will be a big player in. So I think things will look different and feel different because they have Robinhood behind them and the way the firm is moving, but they're still going to be in these kind of traditional financial products, if you will.
Devin, I'm curious, you saw that GDP report we got this morning. To the extent that the economy slows, Devin, maybe even tips into recession, that could mean what for a name like Robinhood?
Yeah, it's a great question too, Josh. I mean, I think it's kind of good in the near term because people are actively trading, right? But to the extent we really had a full kind of batten down the hatches recession, I think that could create some very kind of near-term challenges just because that tends to coincide with more risk-off behavior, and some other metrics can be negatively impacted. So if that were to happen, I think that could be a little bit of a negative near term, but that doesn't take away from, again, the big picture here is what they're building and how they're executing. And the fact they have over 26 million customers today, every incremental product they go into they can do it at very attractive unit economics. So that's kind of the powerful flywheel I think people are starting to realize, but you're seeing it in the $18 billion of deposits, the 60% deposit growth, the 50% revenue growth. And I think that's kind of the forest through the trees.
Devin, always great to see you. Always great to have you on the show. Thank you, my friend.
Yeah, thanks so much. Great seeing you.